Hey everyone, it is Evan here from the Trade Risk on Friday, March 1st, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So week is in the books, the month is in the books, February is over, stocks finished strong to close out the week. I feel like this is the opening line. You could basically replace me with a machine or some broken record because every Friday we seem to basically finish strong, close to the highs of the week, and this trend continues higher. 9 out of the last 10 weeks, the S&P 500 is up. Today or this week is no exception. We can see here good strong close here into the end of the week. Numbers on the 5-day change are back into positive territory. We started this week off pulling back, right? We started with sort of that outside reversal, kind of a short-term pullback, but that just didn't last, at least not yet. So when we look here at some of the major indices versus the major averages here, we are basically above them all and are making progress to the upside. Now, when we go down here to sector performance, biotech taking a strong charge to the top end of this list, along with energy, and slightly behind there is technology. On the flip side, we have materials, we have transports, and we have staples, which is underperforming and kind of on the bottom of the relative strength negative pile there for the past 5-day performance. Now, for major markets, natural gas is kind of bucking the trend here, and this is after commodities for the most part. So take a look down here. This was the real, I think, story or interest this week, was not equities reversing or breaking down. It was actually some of the commodities and bonds, which we'll talk about a little bit later in this video. Otherwise, very quiet, kind of flat to slightly higher gains here for the dollar and for equities. So let's jump into the charts here. Let's take a look at the S&P 500. This is the weekly time frame. This is the cash markets where we like to start all of our analysis. And you can see here on the week, it was up 48 basis points. And yes, we did close over that 2,800 level, which has been much of a magnet here, I suppose, for most of this retracement. Lots of eyes on this level for good reason. This is where the market had failed 3 times before in the fourth quarter of 2018. And it looks like, I mean, for now, that the market is staying fairly strong up here and attempting to move through it on this kind of fourth retest, if you will, the fourth attempt to clear over 2,800. We had a rocky start at the beginning of the week. We'll talk about that in the daily chart in just a moment. But we can see here on the weekly, we are still in the vicinity here of this, what we would consider overhead supply or quote resistance, prior pivot point. So we do still want to be cautious here. Yes, it was great to get a close over 2,800, but we don't have that much distance away from it just yet. We do have a tail down here on the bottom end of this week's range. So, you know, we still have the chance for this slight overshoot, get everyone kind of thinking we're clearing this level, and then, you know, the rug pull from underneath us. So we still want to be cautious here. This is a big relevant level to pay attention to. We haven't quite escaped it yet, but so far the bulls are doing what they've been doing all year, which is cutting through resistance and continuing this trend to the upside. Above this level, we do have a bit of an air pocket here in the S&P 500, 2872. That's kind of the bottom end of this range from, if you can remember, back in August, September of 2018, before we had this kind of big rollover, the sharp kind of breakdown in October. We found some support around that 2872 level. That was coincidentally basically the highs from January of the year. So that is the next big reference point I'd be paying attention to, 70 handles above where we're currently trading. Otherwise, again, 9 out of 10 weeks to the upside here, certainly extended, certainly have had a nice run. Would not be surprising to see a little bit of a pullback or sideways movement here, but we'll let the market decide when it wants to do that. MACD is in positive territory. So if we go down to the daily chart now and we look at this S&P 500, we'll switch over to the SPY ETF. We can see here, we are, as we discussed, right at a inflection point here. This was Monday's session, right? And if you followed along in the past videos, we've already covered this in the midweek video, but we had this gap up and reversal here at the 2,800 area. And then we saw, you know, a very, very mild, if you even want to call this follow through to the downside over the next 1.5 sessions. Wednesday, we had a little bit of what could have looked like a bigger pullback starting to brew. but notice we just didn't get the week close. We saw buyers once again step in off of these lows and drive us higher. We saw an inside session Thursday and then this pop higher on Friday. So there still seems to be very reluctant, aggressive sellers in this market. That can change quickly. The good news is we have a good now reference point to use, very short-term reference point, but Wednesday's lows, 277.48. It's only 3 points below where we're currently trading. It's approximately 1% below where we're currently trading, but that's the kind of very upper level line in the sand that we can start to use going forward if we start to break down and get at least a short-term breakdown of this support, of this pivot where buyers showed up here on Wednesday. That would be interesting to me. That would be maybe a slight change of character in the very short term. So that's what I'd be using going forward next week as a upper level sort of line in the sand. And then it's all of the same levels we've been talking about over the past couple of weeks, 273, 266, 267 zone, and then ultimately around 260 on the downside. On the upside, we just, again, want to get distance away from us in 2800 and continue moving higher, holding above 277. That puts the bulls in the best, strongest case going forward. It's amazing at, kind of at the same time this week that the VIX, which got a nice bid off of lows here early in the week, got back up into this almost 16, or actually it broke into the 16s on Wednesday, and now it's all the way back making new lows in this trend, a 13.42 close here on the VIX, new lows for this trend going all the way back to October of last year. So fear sucked right back out of this market. Trend is continuing higher. Maybe it's complacency, maybe not. So far, bulls, again, just continuing to remain resilient. The Russell 2000, which is one we've been wanting to watch because frankly this has been leading on really the market moves for the past 6 months at least. And IWM here again with the strong 1% bounce back on Friday. We're not quite taking out Monday's highs yet, but we are at least holding above yesterday's or Thursday and Wednesday's lows around 156. So I still think the Russell's worth paying attention to, and right now it's still kind of acting very similar to the S&P 500, holding up, put in potentially some type of higher low here or some structure maybe, and that's something we can use to pay attention to into the coming week. Last but not least is the NASDAQ 100, which, again, is still kind of the most sluggish of them all, right? There's a lot of sideways. This uptrend is really slowed down. This slope is quite gradual, mostly sideways with a slight hint of higher. So this is one we do want to be careful of or pay attention to as well. The Russell has been the leader. It has kind of sparked the moves ahead of time, but I think the Qs also could be, maybe an interesting clue in context here. If this started to roll over, you might actually see it in the Qs first. So it's the Qs and the Russell that I'm paying attention to the most. Again, there's still no real technical damage to speak of at all. There's just this kind of slowdown in momentum and just a gradual grind higher, which does not have to be a bearish thing. It can be a horrendous idea to try and short this ahead of time because, we know the old saying goes, right, where it's dangerous to short those dull markets. It can be very costly. So let's pay attention to it. It's at resistance. It's slowed down sideways. Keep an eye on it into next week. I think the levels here are pretty clear. You can use Wednesday's lows just like we're looking at in all the major averages at this point. And then we have kind of 170, give or take, would be the very nice round reference point to pay attention to. So that is the major market overall. Really not a lot changed this week. We had an interesting start to the week, potentially kind of a shake-up, change of character. But by the end of the 5 days, by the time the week closed out, it was really just more of the same. Pretty much a 1.5 day scare, and that's about it. So that is the equity markets. Don't get complacent, but that's what we're looking at. TLT, let's go to commodities next. So TLT is interesting. This is where the move actually did happen this week. We saw volume pick up and we saw a resolve of this range. It's been in this range for about 3 months, all of this year, moving between approximately 120 and 123, and we're getting a breakdown of this move this week, 2.39% to the downside here in in TLT. That's a pretty good move for Treasury bonds, and we did see volume accelerate on this leg lower. So right now it's in the penalty box here. Sellers in control. Certainly a little extended in the short term. It's always scary to chase these types of things, but as long as it stays below, really 120 in my mind, you got to be cautious now in TLT. Sellers in control here, at least in the short term, until and if we can reclaim that support. So that is a meaningful development there in bonds, and conversely in rates. If we go to energy, USO, we saw mostly lower price action this week, but we did see a good amount of chop. We attempted to break out, looking like we could have had perhaps an inside week, but we started to break down and started to move back into the lower end of, or really it was last week's lower Monday's lows, I suppose, when we fell down to about that 1150 area. Same comments kind of apply here from the last video. Really just want to see this hold above 1150 or so. We want to see this hold above this prior consolidation. That would keep the bull trend intact. That would keep this potential recent breakout intact. It's looking dicey right now. High volume move to the downside. Kind of a outside reversal day today, if you will, on heavier volume. So short term, not a good event right there, but we'll see how USO holds up. Still mostly sideways here with a slight tilt to the upside. That's been the trend. We'll see if that changes. Now, natural gas, this is kind of bucking what most other commodity markets are doing this week. So 4.45% to the upside. It is playing out in that scenario of getting back above this 24.50, 25 area. That's what we wanted to see for the bull case here, to get off of these lows that it was making on the year, get back above some of this key kind of inflection area here, and to start trending to the upside. MACD trying to get back into positive territory. Don't have a position in it, was watching it, just not clean enough for my particular style, but does seem to be some life here. Bulls trying to keep this off the ground and trend this higher now, so could be some opportunity there. I like it as long as it holds above 24.50, and I'll be looking at it for a potential setup, but nothing in the short term for me right now. Last but not least are metals. So GLD, also the story of the week, because these were breaking down gold and silver. You can see finally getting a thrust off of this trend that's been in place since November. It's been grinding higher with pretty much this slope here, finding support and pivots and higher lows right along this trend line. We broke down below that, particularly Friday here, with an expansion in range lower and heavier volume. That's a bearish development there, and sellers now pretty much in control here on the short, to call it intermediate term if you'd like, but for now it's kind of in the penalty box. Does not have to be the end of the world. Even a retracement down to 120 or so, 120 and change, be pretty reasonable, pretty healthy, all things considered, just given the move it had from October, November, all the way up to just a couple of weeks ago. So if it puts in a 40% retrace, 50% retrace even, wouldn't be kind of unreasonable. But for now, that momentum has come out of the uptrend. Same thing for silver. Discuss the position that I've had in silver on the long side for the past couple of weeks. We were stopped out of it today, no longer in the silver position, took a loss on that trade, originally getting involved in it back in here. This again is certainly sporting some technical damage, broke this trend line, which you could draw again from the November lows here, and we are doing it on heavier volume and an expansion in range, kind of a gap and go to the downside. So really nothing you like to see there in the short term. You got to wait for this to settle out now, potentially find some support, maybe retest this $14 range that it broke out from in December. Maybe it'll find some buyers there, stabilize, and start to resume a trend to the upside later in the month perhaps, but that's still optimistic and early. We'll see how it plays out. So no longer in the silver position. Commodities, gold, silver breakdown, treasuries, bonds breaking down. Those I think are the interesting stories, while you have the VIX making new lows in equity markets, still holding pretty firm. So with that said, let's jump into some of the sectors this week here. Top three, bottom three, that's generally what we like to look at. If we look at the top performing here, we got IBB, which is leading here now to the upside again. Remember, this was one of the first to reclaim significant support back in early January over this $100 level. It moved up a little bit more, and then it just went sideways for quite a while. And now it's starting to make that breakout move. Lots of overhead supply still in here. This is kind of an inflection point too, but it did just spend a good amount of time moving sideways, so it likely has some energy here. Bulls in control. I like the space right now. IBB certainly sporting some good relative strength. XLE number 2 here, holding up pretty well, especially even with the pullback we saw in oil this week. You can see it is still kind of at this prior pivot point from December, but it spent a lot of time moving sideways. I like this Friday session here. I like the fact that it was up on heavier volume, making a move here. So something to watch next week. Maybe you get a breakout and some follow through, but we're going to want to see those commodity energy markets start to stabilize. And then finally, we got technology here. XLK number 3, still just ratcheting higher here at a very steep ascent, coming back into some prior overhead supply and pivot points. So we do want to be aware of that. It's a tough chase. It's been a tough chase for the past couple of weeks, but it continues to work. If you're in it, trim and trail. If you're not, well, it's, again, figuring out that entry point is a little dicey. So for me, just a wait and see on this one, but continues to pay to the upside. On the downside, we get XLB. It's the worst performer this week, down 1.43%, finding resistance right where you would want to see or expect resistance to kind of take hold here. $56. Those were the highs from December and November. We're seeing a little bit of a reaction there for XLB. It's had a nice little move there, so maybe a little reaction back down into the midpoint of this range. Not the end of the world, but tough to want to buy into resistance at this point. Kind of wait and see how that shakes out. XLP down just slightly here on the week, excuse me, and this one here again moving sideways, kind of back into a lot of sideways range in here. Doesn't excite me as much, but I do like the fact that it's kind of moving sideways, so maybe something sets up for us next week. And then finally we have XLY. This is the consumer discretionary. This here back into prior kind of inflection pivot points, top end of the fourth quarter range of 2018. Again, tough chase here, but it's grinding higher, putting in some sideways movement. Good accumulation volume kind of coming in here on some of these up days, so something worth watching. Was at the bottom of the pack this week, but we'll see if we get some rotation there for potential trade. Just be aware of what's to the left of you at some of these prior peaks. So that is it. That is what I have for this week's video. Thanks so much as always for tuning in and watching. You can subscribe to our YouTube channel, or you can follow us on the Trade Risk, traderisk.com/blog. All the videos get posted there. Thanks so much. Have a great weekend, and we'll talk to you next week.